out of the fear and everything that has to do with COVID, I see a lot of activity in the new construction market. I see a lot of people building, and I see a lot of people buying. So with rates being where they are, I think that right now is a good a time that, as I've seen, at least for the market to get in there and to start, at least if you haven't built new construction yet, to start kind of getting that experience and getting into that sector, because it is growing and it's moving very quickly. So that being said, I'm going to make a few points here as to what ISB can provide you for new construction, and specifically starting with why you guys, or what we can offer over a traditional bank. So when you go with someone like ISB, the biggest thing is speed, right? With opportunistic real estate transactions, speed kind of compounds itself, and if any phase takes too long, you get backed up, and a lot of times that's going to put a project taking much longer than it should have. So with ISB, as far as your approval, there's no loan committee like there is with a traditional bank, right? You're going to send your application either to me directly, or you're going to apply online, and that's going to get into my hands, it's going to get into Belinda's hands, or it's going to get into Seth's hands. So, there's 3 people that are going to look at it. It's going to take 24 hours, 48 hours, and we're going to be able to get back to you and say, you're pre-approved, or, we want to see, these docs, or we'll ask for something else to continue your pre-approval. So first, with your pre-approval is speed. Over a traditional bank, we're going to be faster. Attached to that is the closings. A lot of times you see traditional banks, we're 30 days out, we're 40 days out. With us, if we give you your pre-approval, we can close and fund in a week, 7 to 10 days maybe, depending on how backed up our appraisers are. So again, going back to that opportunistic element of the real estate transactions, you're talking about applying, closing, and funding in 7 days, as opposed to a month, 2 months, sometimes on the longer end. So that, again, another point that goes to speed, as far as ISB over a traditional bank. Also attached to that, your cash out of pocket. Especially in new construction, you want to pay attention to your cash reserves, because these projects can get expensive, especially on the front end, right? Especially phase 1, that's going to be one of your more expensive phases of your new construction project. So whereas a lot of banks, especially now, are asking for 20% down plus, with us, you're going to bring 10% equity. That's 10% of lot and construction. And we'll get into that a little bit more detail later, but it's going to be 10% of your lot and construction costs. That you're going to bring that to closing along with your points. That 99 times out of 100 is going to be less cash to close than a traditional bank, because right out of the gate, they're going to ask for you to put double down on your project cost, if not more. So you're saving cash out of pocket. You're moving a lot quicker as well. Also, attached to that, is your draw reimbursements. So draws, I think, especially in new construction, the speed of draws are critical, because, there's so much work being done. And the fact of the matter is, your project has to seamlessly continue to move forward, because there's always hiccups in new construction. You could have a week of rain, something always comes up. I've seen, I don't know if you've seen this, I've seen them pour the slab on the wrong lot, on the wrong street. Yeah. So it's like things always come up. Yeah. Have you seen that?
I've actually met Belinda in the Heights area sometimes when you guys are spot checking some properties, and she's like, join me for lunch. And I go with her, we go have lunch. And then she goes, do you want to go check and see some things that happen in real estate? And it just so happens we're driving around, because, she's the queen of there at ISB. And she goes, that's not supposed to be there. And it's, and it's a foundation. So
Yeah,
It
which
happens.
is it happens, but it's another one of those things where you never know. And so with us, it's going to go to another point I'm going to bring up, but those draw reimbursements, I mean, when you request for a draw, we're talking 24 to 48 hours. The inspector is going to get out there. He's going to call us immediately and say, work's been completed. Once he verifies, we're talking, it could be, depends on the time of the day. It could be same day, but 24 hours, give or take, 48 tops, for the draw to hit your bank account. So our turnaround time is quick on that. And that's important, especially when you're paying for phase one out of pocket for your slab, which is a big portion of your line items for new construction.
So Alex,
Also, go ahead. Yeah, go ahead.
Let me ask you a quick question. For the people that are listening, a lot of them are new investors and some seasoned investors that want to move into the realm of construction. Before approaching a lender like ISB, you did say one of the most important things is obviously the appraisal, right? The appraisal is such a key starting point that
Correct.
Sometimes it's better to have that appraisal ball rolling. And then what should the person have already done when they present at least an opportunity to you, should comps,
Right.
build numbers, and where does ISB make themselves different? In the experience we've always had with you guys is that we know there's an appraisal needed. And then we also know the fact that the numbers are going to get checked,
Right.
and that's huge.
Yeah. So that's kind of where, we try and partner with the investor, right? We're going into it. We're going to double check everything. We're going to do our own due diligence. We're going to make sure that you're getting into a deal that makes sense. So that being said, what we're going to look at is, preliminary build plans. We don't even need, city stamped, marked build plans. If you have a drawing that shows elevation, square footage, that can give us an idea about what you're going to build. And also, you want to have line item costing and finishes. So this is going to get us an idea of to what buyer are you building to? What market are you trying to insert this product into in your house, right? Because a product that is going to sell in one area for cheap is not necessarily going to be something that we want to put, in spring or somewhere up north where we're seeing a lot of the higher end deals. So yeah, we would have preliminary build plans. You don't necessarily have to go and have your architect get done and pay him his fee or anything like that. But if you have some preliminary plans, you have line item costing, because the line item costing is going to go into your draw schedule as well. So that's how we're going to do draws for new construction. So if you can provide sketches, plans with elevations, line item costing, and specs, so we know what we're building, what it's going to look like, and how nice, what the scale is going to be at. We can take that, and based on where you're looking, based on your lot, whether you have one under contract or you just say, I want to be in this zip code or this area, we can generally have an idea of okay, what's the cost going to be and what's our appraised as-built value going to be, which, like you said, Diego, that's the most important part, because at the beginning, that's what we're going to lend off of. Correct. Right? So, which is perfect. So it leads me into another point I wanted to bring up, the percentage. We lend up to 75% of the as-built value. Now, that's the appraised value of the home once completed. So that's where, again, the same things we're talking about are going to come in, because we're going to get our appraiser to do an appraisal based on your plans, your specs, your line items. And from there, based on what area you're looking in, or if you have a lot, the comps are going to be pulled. And that number that we get back from the appraiser, we're going to lend you up to 75% of that.
Now, one important thing also that I like to tell a lot of our members with new construction, it's kind of in reverse to the offer side, because we've done this before plenty with you guys, is that, we'll invest in the appraisal, right? And
Right.
then obviously we have our already either stock plans or a prelim plan that we want to build with somewhat of, like you say, a line item cost that your builder, if you have a reputable builder that you're working with, they can deliver something like that. And then in turn, why not order that appraisal and get that number, which then you can start backing into what's the most you can pay for a property. That's huge. I don't know how many times I've had members come up to me and say, I found this great lot, it was only 25,000. And then when we run numbers and I start to think, everything that Belinda has taught us, I go,
Right.
Belinda will tell you, even if they gave it to you, the numbers don't work.
Yeah.
The numbers don't work. So it's kind of good to even invest on the front end side of, with those appraisals before.
Exactly. And to that point too, Diego, we're going to check deed restrictions. We're going to get a survey done. There's a lot of stuff with new construction, on the front end where we need to be sure that, we're not going into with the mindset we're going to build this duplex on this lot, and then there's a deed restriction and we can't. And it throws us all out of whack, and then all your plans are gone. Then we have to look for a new lot or another location. So all of that experience of the team, myself included, but our team at ISB looking at it, we're going to make sure and do that due diligence and make sure, hey, like you said, this makes sense. The numbers make sense. The restrictions aren't there. Yeah. We're clear. We're good to go.
Okay.
Right. Mm-hmm. With that, I guess maybe I'll kind of get into getting approved for new construction.
Absolutely.
I know that you've already taught this, and they probably know a lot of it, but I'll just go over it and add anything new that differs from your traditional flip or rental. Of course, we look at assets, we look at income, and we look at credit. Really, with that, the docs, we're going to ask for 3 months bank statements. We're going to ask for income verification. That's, past 2 pay stubs, W-2. If you're self-employed, a P&L is fine. And we'll run a credit check. What I'll say about all of that is, what we're looking for, one, we are looking for cash reserves, especially in new construction, because one, you are going to have to bring your 10% equity payment down. And also we work off reimbursements, but, phase 1 of a new construction project can be pricey. So we want to be sure that you have enough cash to close and also enough to get through your expensive lot takedown, pouring slab, everything like that. We're going to be out 20 grand, give or take. And we want to make sure that you're going to be able to pay that and allow work to continue while you wait your 2-3 days for your draw to come in. So I don't have a minimum. We don't have a minimum credit score. We never have. We really look at case by case. But I'll say in new construction, we are looking for a little bit more cash because we understand to get these projects off the ground, it takes a good amount of capital to be injected into it.
And one thing, Alex, which is really what great that you guys do when you work with people that are wanting to get into new construction, is that the process, there's also the education side of it, right? You're constantly educating them, especially knowing that you look at a line item budget or a draw schedule, and it's in percentages. It's broken down in percentages. So if you wanted to go over, let's say, the first 10 line items of what your draw schedule would be, what would it be? What would most people say? I have to make sure I have 20%, and this is what's covered within the 20%. Right.
So if we're talking phase 1, in addition to your lot takedown, you got to remember you have to make sure, if you don't have it, your plumbing is in place, and then you're going to pour your slab. That those things, that base, that's going to be I mean, like I said, 15, 20K, that's going to be a lot right out of the gate for your phase one. Then you're going to come in and you're going to do framing, and all of your inside, like the start of building your floor plan, right? All of that wood, all of that work on the front end, I would say is going to be probably your first 15, 20 line items. You know, I mean, you're going to have your big line item costing, but I mean, draw one, you're talking about foundation, you're talking about plumbing, you're talking about framing, and then you're talking about in putting any sort of doorways, prepping for bathrooms, cabinet work in the kitchens. We're kind of prepping to bring everything in to finish out. So, yeah, I would say your phase one line item costing, and again, we have a breakdown too. Like I have a spreadsheet that I can show you, and I show my investors. That's like, look, this is how it's going to look. This is what phase one is going to look like. And like you said, if you don't have experience and you're using a builder or using a contractor and they have experience, they're going to know. And they're probably already going to have a template for a floor plan and say, hey, this is my line item budget breakdown. And 9 times out of 10, you can send that to me and we'll say, okay, like this look, we'll review it, but it will look good. So I would say, I work with the investors, step by step, but your big stuff, yeah, your first 10, 15 items is going to be your big stuff to kind of break ground and get that structure, up and going. Yeah.
Okay. So if somebody wanted to prepare themselves on the on reserves, capital reserves in itself, obviously I know each person or each project has its threshold of money. Would you say that you're looking for 6 months in reserves? Are you looking for, does that make sense?
Yeah. So obviously it'll vary depending on the size of the project and what our costing is going to be for the build. But yes, we're looking for, ideally you have, 6 months of one, interest payments. Now remember also, I'm sure you taught this, your interest payment is going to go like this, right? It's probably steeper with new construction. They're probably going to go like this, but you're only getting, charge interest and paying interest on what you've drawn. But I would say 6 months is safe. And I would say if you have another 20, 30K to cover that phase one, that big chunk, and still have those other reserves for your interest payments and maybe to pay for phase two while you're waiting for your draw to come in, that would be ideal. I would say 6 months plus another 20 or 30K is probably a safe spot.
Okay. So timelines, let's talk a little bit about timelines. Knowing that you guys have put so many properties on the ground, there is, in a person coming from a rehab, which is from a 2 to 5 or 6 month timeline, I always tell people that I work with, I say, don't get into new construction until you've learned patience, right? Until you've learned patience.
No kidding. Maybe an understatement.
Yeah, because the first parts of seeing a property where it's just vacant while it's going through planning and permitting, you're going crazy because, there's interest that's being paid. A little bit about timelines and expectations that ISB says, we'll fund you up to how many months because we think the project will take this amount of time.
Right. So I'll say my average new construction loan is 9 months. We're talking about, permits, plans. That's the thing about new construction. You got your plans. You got to get permitted. We got to lock down a lot. We got to get a survey done. So you factor in a 6 month build time, 6 or 7 month build time. you put another 2 or 3 month cushion on there because we're going to do permitting. Plus, if we're selling new construction, we want to also factor in, you're going to have to list it. I mean, ideally, right, best case scenario, we get it under contract before we're even done. In a perfect world, right?
Right.
But, not always the case. It'll sit for a month or two. So 9 months is what I'm looking at, 9 months to a year.
Good.
Right. Now, I'll say this. I do have builders that have been replicating the same build for a year, for 2 years plus, and they're throwing them up in 3 months, 4 months. But same plans, already permitted. They've done it before. They're just replicating. So I would say first time new construction, in your head, 9 months for sure. I would block that off, and I'll write a 9 month note, all the time. 9 to 12 months is where I would be the mindset. Yeah.
Okay. So in regards to, let's say, types of builds that you guys are able to do, we're talking from, subdividing and building a 5-pack townhome up to a single family or a duplex. What's your appetite?
Right. So we really stay in the single family residential space. So we're talking single family homes, traditional single family homes, duplexes, triplexes, quadplexes. I can go up to 4, right? Once we start getting into commercial, that's not really our wheelhouse. So I can do quad, tri, duplexes, single family homes. If we want to do a townhome package, we can do that. It's going to be, one structure, one loan though. So we can come in, purchase a lot that is platted for 4 or 5 homes, but we're going to either initiate 4 different loans. We're going to put 4 on there, or we're going to build one, complete, sell, refi, build another. Whichever way you want to do it, I will say most people do all 4 at one time because you're saving on costs for that. But single family residential, depending on your deed restrictions, I mean, I just did one, Diego, where we did a condo regime. Familiar with that? And they built one up front, single family, and then they built a 2-bedroom, 2-bath on the same lot behind it. And they're on the same lot, but they're 2 separate. They have 2 different addresses, 2 separate homes. They each own the home outright, and we funded those at the same time. So it really depends on your deed restrictions and the case by case as far as how the deal is going to go. But generally, single family up to 4 doors, up to 4 fourplexes.
Okay. Now, would you say, and something I guess that people may not know this, but it's good to let them know. Explain to us a little bit about the subordination agreements. Explain to us the process of, one thing we like to do is acquire the land in cash value, and then we bring that in as the collateral in the subordination process of getting the construction loan. Right.
So the way that would work is, and that's a good point too, because how I mentioned the 10% equity payment, that's a lot in construction. So if you come to us with a lot, that's going to take place of your 10% equity payment. So you'll have to bring less cash to close because we'll just put a lien on the lot, and that'll serve as your 10% equity. That being said, when we come in, we want to be first position. So we're going to subordinate the lien, and whoever is on title is going to be the subordinate lien for the time that construction is happening. So ISB will be first, and the investor will be second position. Once work is completed and we sell the home, release lien. We don't take any profits. It's all you. But for the time when construction is starting, ISB is going to come and want to be first position, and you'll sign a subordinate lien agreement and everything like that at closing. And yes, that's how it works.
And Alex, that is it's amazing how, for example, a lot of attorneys or a lot of people don't quite feel comfortable with doing that. But you look at every builder that works with a larger lender, that's the process.
Mm-hmm.
They're constantly subordinating tracks and tracks to get loans to get loans. So
Mm-hmm.
when anybody talks to you guys about a subordination agreement, that's standard practice in the business.
It happens all the time. I'll even have a builder who came to me that used a private lender to buy a lot.
Mm-hmm.
I talked to his private lender. The private lender subordinated the lien. We came in. We financed construction. Construction completed. Sold. We released the lien, and the investor and the private lender take their profits and walk away.
Sure.
It happens all the time. Yeah, it's standard.
Excellent. Now, are there certain areas right now, and we're getting a lot of questions from people that are asking questions, obviously in the Q&A session, which we'll answer those here in a little bit. But any particular areas that ISB will say we don't lend in? Are we talking about near super industrial areas, too rural, things like that?
So, not necessarily industrial, but rural. So we try to maintain within a certain square miles of downtown Houston, let's say. So for example, I've lent down in Angleton. We're looking into a few places in Corpus. So we'll lend, but when you're talking about 2 hours outside of Houston, in between Dallas and Houston, in somewhere where it's difficult for us to get people on the ground to monitor the project, to go out and send inspectors out. That's when we kind of try and steer away. I would say we aren't hindered. There's not any restrictions. But when you start getting into the more rural areas, that's what I would avoid, because it's difficult to manage a project there, especially new construction. So I would keep it, if you start going like too far north of, let's say for Houston, of Conroe, you pass Conroe and you're going, or too far east, like you're getting to Huntsville, things like that, where you're driving 2 or 3 hours out of the Houston city limits, I would avoid that. We kind of try and avoid the very rural areas.
Okay. Was there any other particular topic? I think you have 2 more topics that you wanted to quickly cover there before we went into the Q&A.
Sure. Let me double check. We kind of covered a lot, just you and I talking. So I think we went over line items. We went over draw requests. That's what I wanted to go over. So the only other thing I'll say is, if you don't come to us with a lot, if we're helping you finance a lot, it is going to be a one-time close. So we're not closing on the lot and then closing on the construction loan. If we're helping you finance a lot, it's all going to be looped in, lot and construction budget. Keep in mind that 75% as-built value, your lot and your construction budget is going to have to fit into that. And also, if you're hiring a builder, if you're a first-time investor, and you're hiring a builder or a contractor to build for the first time, make sure that you don't forget to put their fee into your costing. Because I'm not sure what they're going to charge, 10K, 20K, it varies, but that's a big chunk too that you want to make sure isn't something that we don't, hold and take into account when we're filling out the budget.
Correct. Now, one last question here before we go into the attendees. Talk to us a little bit about the holdbacks. What is a holdback, and where does a holdback play a factor in the draws, for example?
So holdbacks are, I'll say, I don't run into them very often. But a holdback is going to be something where we're gonna hold back X amount of funds with the stipulation that something is going to be completed. It just off the top of my head, it's not a new construction deal, but first thing that came to mind, because we just did that, we did a cash out on a home, and the home still had work to be completed. So we advanced the dollars for the work that needed to be completed, but we held back the rest out 70%. We held back the rest until inspector went out and verified work was completed, and we released those funds.
Okay.
So the same thing's going to happen with, let's say we're going in and we're purchasing a lot. We advance the funds for a lot. Those construction funds, if there's any hiccups as far as survey, permits, deed, there's going to be a holdback on those funds for construction until, with the stipulation that everything is clear, and then we'll release those funds. The holdbacks, definitely something to be aware of, but something that we're going to make you aware of way before, closing. Hey, we're going to hold this back for this reason.
Right, because I think one of the last things, and Belinda and even Tom, one of the owners of ISB,
Right.
state is they're not in the business of taking back properties.
No.
No. So they're going to go above and beyond at the beginning, in the process, and even in the final side of helping you what the best exit strategy of this is. So with that said, it's always good also to know that people, if you are going to go embark in new construction, that you may also look at your eligibilities of a takeout loan, which is a refinanced, more conventional, or having a backup plan to get ISB out of that construction.
Right. If you happen to own properties free and clear too, that's a great option, because it's you can go in, do a cash out, and give that injection of cash that you need for your new construction project. But yeah, we do very, very in depth. Our foreclosure percentage, I don't even know what it is, because it's so low. We don't take properties back. We're not going to get into a deal that we don't know is going to work out. And so I never see it. I think there's only been one or two foreclosures since I've been with ISB, and that's just from investors who outside variables came into play and they weren't able to continue on. But it's very rare that ISB forecloses on something. Yeah,
I can vouch for that 100%. You guys are a great outfit. So let's get into some questions here. So let's start off here.
Sure.
We have Troy Covey. He's joining us from North Carolina. He asked us, do you guys lend in North Carolina?
We do not, Troy. We are only in Texas, lending in Texas right now.
Well, Troy is actually one of our SVI members from North Carolina. He's got your contact information, because I'm assuming, with this information, Alex, there are going to be some type of ISB type lenders in that area. That plus also Troy is also investing here in Texas too, so y'all might be able to work together.
Okay.
So
absolutely.
Okay, let's take a look here. Another person asked here, is the percentile standard still 75%, or has it been reduced because of COVID?
We're still at 75%. No reduction because of COVID on new construction or flips. But yes, we are at 75% still on new construction.
Got it. Here, what are your interest rates and points?
Good question. So I have a range. We really set them case by case. But I'm right at around 10%. I would say 9.99 and 3 points for new construction.
Okay. Let me go ahead and take that off here. We had a question here. What is the minimum credit score requirement? Miss Anesia Carson was asking.
Anesia. So I don't have a minimum credit score. I'm not restricted like a traditional bank where it's like, I got to have this score for you to qualify. We do look at the whole picture. So I don't have a minimum score, and I don't even want to say a number, because I've seen people with lower scores that had a lot of experience and had a lot of cash reserves, and we felt comfortable with the project and we approved them. So it's really going to vary. We're going to look at the whole picture. And also in this business, I understand, you have to understand investor scores are going up and down all the time. You'll get credit pulls. And so we don't have a minimum score. What I'll say is you're not going to be eliminated solely because of your score. I'll say that.
Okay, great. Somebody asked here, it says, what about putting up 2 single-family homes on one lot at the same time? Do you do that?
Yes. Assuming, it being one lot, the deed restrictions, it's platted to have 2 single families, that's something, yes, that we would do.
Okay, great. And here, Miss Lisa De La Garza asked this question, which is a great question, Elisa. Thank you for asking. Is other than 3 points and 10% interest, do you charge other fees to close the new loan? And how much does it cost for your draws?
Great question. So one, remember that appraisal is going to cost $450. That's up front. That's before closing. So that's $450 for the appraisal. So, but other than that, closing costs, there's going to be a $650 processing and underwriting fee. That's for us to pay our underwriters and our processors. And as far as draws, it's $175 withheld from each draw. So whatever your draw amount is, less 175, that's literally just to pay the inspector to go out there and verify work's been completed for us.
Okay, excellent. I hope that answered, Ms. Elisa, that question for you. Leonard Higgs, oh my gosh, Mr. Higgs, thank you for joining us, sir. It's always good to hear from you. Does your lending program also include prefab or modular build houses as long as deed restrictions allow?
No, not at this time. It's traditional slab, single family, yeah. Okay,
traditional slab, single family. All right. So we have more time here, guys, if you guys have any other questions.
Yeah.
So I've got a question for you here, Alex.
Sure.
So somebody wants to embark on building one house next to other builders, that are, sometimes you'll see a piece of property and it's vacant, but then they're building everywhere else. And then you're wondering, how come a builder didn't pick up this piece of property? What's your overall opinion on that? Because we in the past have found out that if none of these builders have picked up that piece of property, we have to be very careful that a lot of times some builders, the larger tract builders, can take losses and still be in business. And so that's because they're putting their crews to work, that it may not be feasible for us to even make money on a piece of property like that.
Yeah. So the larger builders are going to come in. I see a lot of that in like Independence Heights, getting north of 610. The big builders are in there, and there are lots available, kind of like you're saying, in the middle of all that. Now, as to why they're passing on those lots, I mean, one, it could be whoever owns the lot isn't selling. I mean, that could be, the first thing. But, I'm not sure. It varies, and with a big builder passing, I would be wary. And that's something where, we would come in and we would do our due diligence and we would say, hey, this is the reason I wouldn't get into it, but it seems like a good area to build. Maybe we look for something, elsewhere, a little bit further out. So that's one of the things partnering with us, where again, we're going to come in and we're going to find out.
Okay.
We're going to find out, and also with those builders, that lot, the price has probably gone up pretty high as well.
Right. And we have a question here is from Troy. Troy Esmalov asked, how is insurance handled on these projects when they are when it's in the process? Do you have certain requirements as a lender?
Yeah, so we're going to ask for 1 year builder's risk, and that's standard. I mean, even if the project is going to take 6 months, sometimes we'll do a 6 month, but I'm going to say 1 year's builder's risk on the new construction projects. That's what we're going to require.
Okay, and if the property is already, let's say, completely built, then you're obviously we would need to look into vacant property or some other type of
exactly. So
okay.
once it's completed, we're gonna switch that over into vacant insurance policy.
I think to go back just a little bit on a very good point you said earlier about interest payments going up, is that when you're doing a rehab, a lot of lenders will say, here's the money that goes into the purchase, and let's say 70,000 goes into the new construction. Goes into the rehab escrow. You're being charged full interest on that 70,000 from day one with a lot of the hard money lenders on the rehab side, if it were a rehab loan. On a new build, your interest climbs as you use the money. It's not there. Do you see what I mean? So overall,
yeah.
You can't expect to have the same monthly payment as if you were doing a rehab. It's going to exponentially grow, which I always tell people that your builder will make you or break you, because you do not want to have that higher interest. Basically, it's a tiny little Pac-Man that just turned into a giant monster.
It can happen quick.
It can happen very, very fast. It can happen very, very fast.
And so, that's why we want to see those reserves, because we know that, and like I said, that trend it's not this kind of trend. It's more like this, it increases quickly, especially in new construction. Mm-hmm. So again, up front, we're going to be able to forecast, and we're going to know, hey, if you want to know what you're going to be paying each month, like, I can give you a pretty dang good idea just based off your line item costing and everything that we're going to have up front. We're going to be able to look at this project from now to 9 months down the line.
Correct. And for those of you that are joining us, StratiVentures is going to be having some new construction and some affordable housing workshops that are going to be coming up here in the next month. So if you're interested, feel free to go ahead and email Enid, and we can get you guys all the information for those workshops. Because as we always like to tell people at SVI and members of SVI, or those of you that want to know more about SVI, is that if we can create a better investor and a better educated client for you, Alex and Belinda at ISB, the business relationship just goes one way, right? It grows.
Yeah.
Yep.
It's that's what I'll say. I'll say about SVI and Diego is when SVI members come to us, y'all are coached to the point where it's very much y'all have everything and you kind of hand it to me, and there's not a lot of back and forth, which can back things up a lot. And it's a very smooth, it's a very smooth process. Yeah. Yep.
So one thing here, affordable housing, right? What type of limits and loan amounts are you guys lending on products like that?
So I have never seen something that was too low for us. Granted, if we're talking, I actually don't even want to say a number because we haven't seen anything that's too low,
Right. Because right now we're working on getting some proposals out, and we're hitting 150,000 construction values. And I think that's absolutely.
That's great.
Yeah.
150K is great. I mean, those are the deals, and I'll say those are the deals that are going to move.
Yeah, exactly. And so those are the workshops that are going to be coming up. So feel free to, Enid, if you don't mind putting up the full contact information to everybody that's there, so they can get some more information on those workshops. Because I think, like you said, Alex, one of the biggest things that we're starting to see in the market is new construction. It's instant equity, at 75%, rolling those things over into a rental property. There's room there for, it's amazing. Also, if you can, Enid, input my phone number and email, and also Enid's yours, so we can be able to talk to them. Let's see here. We got a question here. Let's see, how much reserves are required? I think you covered that earlier. You said you want to see that there's enough to cover at least this 6 months worth of debt service and obviously draw reserves.
Correct.
Excellent, excellent. So is there anything that you want to tell us, other key topic? I mean, new construction financing, things that you want to share? We still have a little bit of time for questions also.
Yeah, well, happy to answer any more questions that come up. What I'll say is, with new construction, it can kind of be daunting. I think that's the best word for a lot of people, especially, first time investors. Generally, if you have a reputable builder, and attached to that, I have quite a few.
You do, yeah. You guys have really good. You guys have good builders.
Yeah. So don't. We're here. We're gonna move with you. First step, the last step. If it's not even first step, and you're like, man, I need a builder, I need plans, feel free to reach out. I have quite a few builders that I work with all the time. They're great. I can show you their finished products. We've lent on their finished products, and so it's something where even if you just didn't get enough from this and you want to know where to start, who to call, I mean, if you're not going to call Diego, I would say call me and I can help you out, Yeah.
Let's see here. Kimberly just asked a question. It says, when purchasing land, what should be taken into account? For example, easements, deed restrictions, I'm assuming, zero lot line factors.
So yes to all of that, but what I'll say is that's our due diligence that we're going to do if you come and you bring us a lot. We're gonna do all of our due diligence, restrictions, easements, anything on title isn't clean, anything like that. We're gonna take a look at. As far as you individually purchasing a lot, I would check deed restrictions. I would, when you're getting under contract, make sure, title's clean. There's no, like you said, easements, any tax judgments, anything like that that's on it. Definitely do your due diligence before you go into a lot. And again, if you come to us and you bring us a lot and you want to purchase it cash, but you want to say, hey, could you look at this? We can do that.
Yep.
I mean, it's one of those things where, you and your team get as many eyes on it as you can and make sure that, this is the good move and there's nothing, in the background.
And Alex, you guys also, I know, have a presence in San Antonio, correct?
Correct.
Correct. So Robert Rogers, who's one of our San Antonio members, asked if he were to give you a call, you might be able to direct him to one of your builders or a contact or people in San Antonio that might be able to work through, obviously, ISB.
Yes, absolutely.
So Robert, answered your question there, sir. Alex is a great guy. Don't hesitate to call him. He's there to help you out. He just wrote back, awesome. That's awesome.
Perfect.
Lynn in San Antonio asked, you mentioned you do loans for rentals. Can you talk about doing this after the construction? Well, Lynn, they don't do loans for rentals. They do construction loans, and you'd have to basically get a takeout conventional loan to refinance the construction loan from Alex's company.
Correct.
Yep, right there like that. And I think we have another question that came through here. Zach, welcome back, Zach. I just wanted to say that. It says, I'm assuming ISB is okay with septic and well, etc., if needed and permitted?
Yes. Yes.
Okay, great. Good question there.
Yeah, that was a good question.
Yep. All right, guys. Well, we're coming over into the last part of here, the webinar. Alex, the information was phenomenal. Also, by the way, guys, remember earlier I told you that we are holding those new construction and rehab workshops. So for those of you that are new and wanting to learn the ins and outs about investing or new construction, make sure you contact myself or you contact Enid. And we are in those workshops. You're going to be leaving with all the tools. You're going to be leaving with the deal sheets, the line items. You're going to be leaving with everything you need to do all that great study, and most of all, get you prepped and packaged so you can work with people like Alex in order to make their job easy to say yes. You know,
Yeah.
that's
Hey,
obviously.
we never want to say no, Diego.
No,
We
I
never
know.
want to
Oh,
say
I know
no.
that. I know that. I
Yeah.
know that. Yep. And I know, I think Belinda's out today. You got on your company fishing trip or something. I know she's an avid fisher. Fishing.
Yes, yeah, she's out fishing. So I didn't go. I went fishing last week, so I stayed and kind of picking up the slack. Which with Belinda, you know,
Yeah.
there's too much slack. She does so much. Yeah.
And you also, ISB also has a counterpart if people wanted to invest with you guys on portfolio type of lending. Am I correct? Is that something that
Correct.
they'd be able to contact you? Excellent.
Correct. You can contact me about that too. That is into the fund, and if you call me, we can talk details. But yes, that is an option.
All right. So everybody that has joined us this evening, thank you so much for your time, Alex. It's been great. It's always good seeing you. Hopefully, everybody's playing it safe. We hope to get back into the classrooms and get to working with as many people as possible. We are holding those workshops online via Zoom. I can't stress the fact that right now, everybody that is not involved with a support structuring team, that they need to do that, because what's going to be happening in the last market study talk that we did, we're going to be seeing a lot of things opening up to us as investors. I know there's a lot of inventory of raw land that the city is already starting to talk about grants, already started to talk about redevelopment processes.
Mm-hmm.
So if you get yourself fully ramped up with a solid team, solid vendors such as ISB, you'll start off, you know, obviously what's going on is not favorable to families, to the economy, but definitely if we're going to get back onto the rebuilding of what's happening, we can all do our part. So,
right, exactly.
Alex, again, thank you so much for your time. Everybody that's joined us, again, thank you so much. We had a great turnout. And I believe for next Monday, short-term rentals, guys, short-term rentals. Colin Williams is going to be joining us. He's got a lot of great information to share. And Thomas Belinda said hello. We love her very, very much.
I will. Thanks, Diego. It's good to see you, man.
Absolutely, guys. Everybody have a great evening. And by the way, with all of your contact information, we're going to be putting this webinar up on the StratiVentures YouTube page. So subscribe, please, guys. The girls always tell me to say, make sure to subscribe to us. Yeah. And then you'll have your full contact information and information there, Alex, on the webinar. So thanks, guys.
Hey, thank you.
Everybody have a great day.